Hello traders, welcome to the ACB Masterclass, the Ain't Coming Back trade setups. Hopefully after this Masterclass webinar, you'll be having a clear, thorough understanding of the opportunities, whether you're trading one specific market or following a small basket of instruments hunting out these setups. Now, the purpose of the Masterclass is to help traders understand and identify the highest probability days on any market for parabolic explosive trade setups, regardless if you trade one market or multiple markets hunting the same setups. Now, these are the setups that we can look at being in these positions, and they will go to the close of the day in most cases. Now, the main focus is going to be understanding the higher time frames. We're going to go in depth through multiple markets and understanding the monthly cycle, week 1, week 2, week 3, and week 4, and high probability signal days throughout that month, but understanding when a new month starts, how price can behave and offer traders opportunities for the high close of the month or low close of the month if a market is about to go on a range expansion. Now, we're also going to go in depth into 3 higher or 3 lower closes and understanding the importance of that to identify these high probability days. And in a lot of cases, these will occur on a Tuesday or a Thursday. So we can have extremes forming in our month on a Tuesday or a Thursday. And we're going to be going into that as well, understanding the patience of letting a template set up when we have a new week starting, if we don't already have a signal or an opportunity on a particular market. And using our lower time frames for entries, and what we're going to be going through is the EMA Coil, which will help traders identify and remove analysis paralysis, but aligning all the time frames for these setups. Now, the big picture is just understanding, looking at daily charts on any instrument, the opportunity and the understanding to identify markets when they break out. Now, that's going to be a big thrust in this presentation, understanding when markets break out. They only do 3 things. They will continue to trend, or they will fail and reverse. And some of these opportunities are going to give us violent reversals or violent explosive continuations. And when we look at different markets, they have different characteristics, and we'll talk about that as well. Just in simple terms, when we have a new month, it's a new timing cycle. For various reasons, they can lock in their books. Larger players may take new positions or be holding their positions. But we're going to talk about the front side of the month and the back side of the month. We have a new month beginning. Week 1, week 2, week 3, and week 4. Now, throughout that monthly cycle, we will have non-farm payrolls, we will have CPI, we will have FOMC, and on these particular days, we're going to be looking to either not trade at all on those days because everything is based on the closing price. What we are looking for, though, are signal days. We can have 3 higher closes, we can have 3 lower closes. And these can help us identify extremes in a new month, and also signal days. We'll have our first green days, and just keeping things simple. So there are going to be months that aren't as opportunistic as other months, but we can still have fantastic days within that month that offer us explosive parabolic opportunities. Now remember, we can be looking at a different basket of instruments for optimal signals. 1 or 2 of these a week in any market are enough to significantly compound your account. And what we don't want to be doing is trying to trade every day. You'll notice that these markets are all staying inside of previous days' range. Not until a market breaks out do we potentially get a signal day. And often some of these larger range days are driven by news catalyst movement, which is why I talk about FOMC, CPI, non-farm payrolls are days potentially to avoid, or if we are going to be positioned in line with an existing move already, waiting for after that news and not potentially taking on as large a position. But when we get scalable opportunities where there is no fundamental news and we're starting a new month, we now may have an opportunity to position ourselves at the beginning of a larger move. And when some of these markets take off and we have positions in those markets, they may go on for 2 or 3 days. The whole point of this is not getting caught into chop and trading in markets where it's going to be constantly going back and forth against you. Even if you're in the right move, you've got to nail and bail constantly. And so we're looking for the highest probability opportunities. And when a new month begins or when it's ending, we can see these opportunities present for either larger scalable opportunities over the course of the month or large all-in days where these opportunities will present. Most importantly, though, I want to just walk through the understanding of when a market breaks out. When a market breaks out, we have 3 higher closes in this particular case. 1, 2, 3 to the high, an inside or a narrow range day, and a reversal collapse back into the opening range of the month. So we have a market that's broken out and reversed, consolidated, and continued to trade higher. We have our extreme in place, 1, 2, 3 higher closes. So just coming back and thinking bigger picture, we broke out, we traded higher, that reversed, but we dumped down before continuing the long position move. The market broke out and reversed, and again dumping down heading into the new month, we have 3 higher closes again for a dump day into the breakout, into our close and breakout. And then we have our 3 lower closes again. Now I want to identify something for traders. We have 3 lower closes. We have our initial 1, 2, 3 sideways inside of our large range bull candle that's in breakout. But then we also have 3 closes successively in breakout. 3 successive closes in breakout, breaking out, consolidating, breaking out, consolidating, and breaking out a third time. That third close in breakout now is the potential opportunity where traders are looking for the reversal. This reversal day occurred on a Tuesday. So coming back to understanding, Tuesday and Thursday can be very high probability days, but whenever we get 3 closes in breakout and we are at the high or low close of the month, which occurred on a Thursday, Friday reversed and gave us our first red day in a market that continues to make higher highs and closing in breakout again. And then a large reversal collapse back into the breakout. So emphasizing 2 situations. Number 1, the 3 higher closes, 3 lower closes after a market breaks out, but we're still inside of the range. So we've got a breakout day and then the consolidation into the new month, a reversal day, and that breakout starts our count again. 1, 2, 3 lower closes, a first green day engulfment of our 3rd lower close, and the explosive move back through the high of the previous month. 1 close and breakout, 2 closes and breakout, consolidating. It's not broken out of the high, and then a 3rd close in breakout that consolidates again, giving us the reversal day setup, which we'll be going through in depth. The most important thing right now is understanding the new timing and understanding 3 higher and lower closes and differentiating that from 3 successive closes in breakout. Whenever a market closes in breakout and consolidates, we can count 3. 3 lower closes, an explosive breakout day. 1, 2, 3, and then another explosive long day back up to the high of the pin. 1, 2, 2 higher closes, and a first red day as the new month starts. New month, new timing cycle, and we have 1, 2, 3 months closing in breakout. That market trades back through that higher low after the breakout from the previous month was made. And that level now can be significant as the market may continue to break down. So we have a breakout, 1, 2, 3 lower closes, a counter trend day, and a continuation, 1, 2, 3 lower closes again, a breakout day, another reversal day. So we have a market closing and breakout and a counter trend day. Remember, this is still breaking down, making lower lows and lower highs. So this counter trend, bullish counter trend day, again, is a signal day when a market closes in breakout. As it makes lower highs and lower lows, it may offer us the continuation setup in our session to continue that move down. High of day reversal, depending on which session that showed up in. But for the simple understanding right now, I want to walk through these daily charts to emphasize to traders getting used to seeing 3 higher and lower closes and markets when they close in breakout, whether they're closing in breakout against a move or closing in breakout with a move. Now, as this market works its way down, we have 1 counter trend day, 2 counter trend days, and a pin hammer at the low of the month, which could become a first green day setup. Now, you'll also notice we've taken out the low of the previous month. We've broken through the low of the previous month. So high of month, we look for first red days. Low of month, we're looking for first green days. Now you'll understand again, we're using end of day closing price here. These are daily charts. So nothing happens until the day closes. Those are the signal days. If you're trading inside on smaller time frames each day, you run the risk of getting chopped up in volatile markets, whereas when we wait for these closes to occur, we have high probability setups coming off of higher time frame signals and closing in breakout. So we've cleared through lower high of day levels, and again a signal day, market closing in breakout for a potential reversal in a market that broke down. Large day, trading back into our first green day, and now potentially a green day signal to resume the move back up into the close of the month. Now you'll notice again at the close of the month we have 1, 2, 3 days in breakouts, and it continues again into a 4th day closing in breakout. Now what I'm most importantly trying to emphasize to traders is that you don't have to be trading inside before when a new month starts. You don't have to be trading inside trying to get one of these moves. We have 4 days in consolidation. We have what Al Brooks would call an IOI pattern, an outside day on the first day, but the market then closes in breakout. 1, 2, 3 lower closes. And then we have an inside day, which also can now be a first green day. Whenever we are at the highest closing price of the month, and we have this second hit to the high, again, highest closing price of the month or lowest closing price of the month, we may now have a day that sets up for a parabolic reversal opportunity. What's important is identifying these on the larger time frame and getting away from trading inside every day without an awareness of the larger template that's in place, the monthly cycle. So we come into our closing range of the month and we get a first green day and a market closing in breakout, 3 higher closes again, closing out the month. 3 higher closes, a consolidation, and a dump day that closes in breakout. So an extreme, a breakout day, and then we're looking for 3 lower closes from that extreme. And recognizing that these 3 closes are underneath of the high close that forms the extreme. We'll see different variations of that. Where is the low close of the month? Well, after our breakout day, our low close of the month is down at that large range breakout day. And just mentally repeating to traders, thinking week 1, week 2, week 3, week 4. And we get into week 2 and we have 1, 2, 3 higher closes in breakout and then a first red day signal. Market closes in breakout and an inside day. Now I just want to repeat as we go through this and identify the days, there may not be a setup in the session that you're trading. So for example, this is the NASDAQ. We can go to New York and the market's already descended out or been moving. But you don't want to be counter trending a market now that is potentially reversing and heading back in the other direction. Just understanding when the setup presents with the higher time frame thesis, we will get our opportunities. Chasing the move or trying to get into the market and it's not actually set up in that session. The market may move in an earlier session. It might be broken out. It might be too far away. It might be trapping shorts down low, whatever that may be. We're looking for the opportunity in our session, but understanding the bigger template each day will help us identify when that opportunity presents in our session. Now, again, remembering you may be following 3 or 4 markets and targeting 1 or 2 setups a week that are scalable in size. And when they're scalable in size and they're going to a close, these are the types of opportunities that you can set and forget. You'll be able to take a trade, put your stop in place, and walk away, as opposed to trading each day where we're in a consolidation and the markets break out and pull back and there's wicks everywhere, where they're nailing bales. We get these little 2-day counter trends in a market that's broken out. We may now have an all-in opportunity when we get to our session for a hold till close trade setup. So the market may explode on major red news, could be non-farm payrolls, can be taken up for 3 days. It could already be broken out and continuing to trade outside of our window. But when we get that opportunity in our session, these are the market setups that when they coil and explode in that direction of where they're not coming back, they're hold till close trade setups. Now, often when we get markets like this, traders will see the first red day and be constantly trying to trade against that. And we can see where we have an example of 3 lower closes, a first red day and 3 lower closes, and then a vertical move, and the market that closes in breakout. Now we're closing in breakout against higher time frame buyers. So again, the market has broken out. We now have a market that's broken out. It's not a failed breakout or a false break. This market has broken out and continued to trade higher. So again, an example of where if we have a short trade, we're trading that into the breakout, taking the money and running. But the monthly cycle, now we have a market that's broken out, closed in breakout, and continuing to trade higher into the close of the month. We close in breakout, we get our consolidation, and we get a first green day inside day set up right into the close of the new month. A 4-day coil into the first trading day of the new month with first green day at the low of the month for the explosive reversal starting off the new month, new timing cycle. First place they go back to is the high of the previous month. And just stepping back again and looking at the higher time frame, dump and pump template, new month, new timing cycle, new setup opportunity. And just in simple terms, understanding that if traders were trading end of day and positioning themselves in the markets based on taking positions, smaller positions, we still can identify 1-bar stops at the extremes when we spot market opportunities for these reversals back to the other side of the range. Now we have a market that's broken out again, and we can look for 3 consecutive closes in breakout to potentially identify either a reversal opportunity or to wait and sit on our hands if this market is going to continue to trend into the close of the month. We wait and we look for the 3 lower closes again. Big thing to realize is that just because we get 3 successive closes and breakout, that this market does not have to necessarily offer us a reversal range trading day. So traders are trying to counter trend this, but this market has broken out now, and now we wait for the new timing cycle. Now there may be some nail and bales in there if traders decide to do that, but we're trading back down into the breakout when the new month begins. The easy money may be to trade with the trend, especially in the indexes. Indexes long-term continue to go higher. Funds are forced to continuously buy with their retirement fund money every month into these indexes, the larger indexes. And so the underlying thesis is that when we get a down closing month, a counter trend month or 2 successive down closing months, we may now be gearing up for an explosive continuation move on the US markets. We get a breakout again of the new month, and the market again, we count 3. 1, 2, 3, consolidation. 1, 2, 3, reversal day. 1, 2, 3. So we have an inside day, and then 1, 2, 3 to the high again. New month, new timing cycle. We have a first red day that closes in breakout the following day into our new month. 1 big range breakout day. 2, 3 lower closes into our new month. We get a first green day, and that market resumes, goes up, coils sideways, and explodes back through the high of day level again. High of month level again. But you'll notice on the way, it goes 1, 2, 3 closes and breakout before going into consolidation. And we have 1, 2, 3, narrow 2 double inside day, a double inside day from the playbook, a larger outside day, a counter trend day with a lower high, lower low, but we're inside of the breakout. So remember, this market has already given 3 lower closes. We have our breakout candle. So breakout candle is still intact. They've pinned down into that before closing back in range. This is one large consolidation sideways. And you'll remember the phrase where I talk about when a market coils sideways underneath of the high of month, high of day, high of week level, or on top of low of week, low of day, low of month level, it's potentially preparing for a large explosive move. Just coming back to counting with 3s, 1, 2, 3 closes and breakout, 1, 2, 3 double inside day, 1, 2, 3 exploding back in line with our original first green day explosive move, and continuing the breakout through the hive month. So we have 1 close and breakout, 2 closes and breakout, consolidation, and a 3rd close in breakout again. We get a first red day signal. So coming back to understanding that when the market comes out of an explosive breakout like this, and we can now see that these months are closing successively higher, not necessarily wanting to be looking for a large counter trend reversal. Remember the timing cycle. We get a market then that closes in breakout long again at the high close of the month. High close of month, and we see a reversal day come off of that before the month ends, and we start a new month, new timing cycle. Now, counter trend days are more important to understand when a market's broken out like this. We have a consolidation, so a down closing day in a market that's broken out, again, another signal for a potential continuation. Breakout, 1, 2, breaks out a 3rd time to the high. So we have our breakout of the high of the month, consolidation, breakout again, 1 day, 2 day counter trend, and a 3rd break closing at the high close of the month in our last week of the month, last trading week, week 1, week 2, week 3, and week 4, closing out the month. New month, we see 1, 2, 3 higher closes, a 1 day counter trend, a breakout of the high of month level. So we have 1, 2, and a 3rd breakout, but now a new breakout and 1, 2, 3 higher closes, high close of the month level. Now right now we're walking through on the daily chart identifying this in hindsight, but most importantly we will look at specifically how these markets will set up if they are reversals, but more importantly understanding the difference between a breakout in a market that's already dumped down and coiled, an explosive breakout in an index. New timing cycle, we continue to coil and break higher, but we're trapping longs up near the high of the month as we break out. And when we see these types of high closes, 3 higher closes after a breakout, immediately after a breakout, how does price behave on the day? We'll be looking at those specific days where setups are coiled sideways, or there's a news release and it breaks one of the extremes but coils into our timing window. We're going to be going through timing and understanding 4-hour rotations. But that market pulls back into the breakout. Again, 1 inside day, a breakout candle against our high bull bear reversal And again, another potential signal of where a market may be giving us a reversal trade setup. We're trading back into the peak formation. It's broken out, closed in breakout against that first red day reversal. And you'll notice on the higher time frame, we have one breakdown, a second breakdown, an inside day, and a third breakdown back into our opening range candle and our low bear from the closing range of the month. So our first green day signal at the low of the month level, or into our low of month level, may be a valid continuation for the long trade setup. And just coming back to reinforcing week 1, week 2. So week 1, week 2, we break out, we make higher highs. Higher highs in a market that's closed in breakout long. We've dumped down. First green day, an explosive move heading into the closing range of the month. And you'll see again, we have 1, 2, 3 lower closes heading into the close of the month. Now, hopefully, after we go through this instrument, you'll have the firm understanding of 3 higher closes, 3 closes in breakout, and 3 lower closes, the significance of them when they present, and just stepping back and sitting on your hands, not worried about catching every little move each day, but focusing on where the real opportunities are that are scalable. And then aligning yourself with the stronger underlying thesis that could be in place. So if we're counter trending against a strongly bullish market, we can count counter trend days and look for continuations. We can look for reversal setups when they properly present. But more importantly, not just trying to trade off the extremes every day and getting caught into a market that could potentially just be in consolidation sideways. New month starts. We have 1, 2 closes in breakout and a first red day. So even though it's a first red day, this close, we have a close and breakout. These are all still higher closes from the breakout. 1, 2, and 3. First red day gives us a first red day reversal setup on the day. Whether that occurred in the U.S. window or not, doesn't matter. Then we have our inside day. We've broken out of the high of the month level heading into the new month. Again, another month that closed in breakout from the previous month. Now we see more volatility coming into this month at the extremes, which is a telltale sign now that we may be getting near the end of this move. So counting again, 1, 2, 3 lower closes from our first red day at the high of month level. And just repeating that is the high close of the month. Once it takes out that wick, high close of the month, first red day, and then 1, 2, 3 lower closes. A higher high in consolidation and a first green day pin hammer heading into week 3. For an explosive 3 higher closes in breakout, our inside pin hammer candle inside of our 3-day consolidation, and then 1, 2 closes in breakout at the extreme. 1, 2, 3 higher closes coming out of consolidation. Heading into the closing range of the month, we get a first red day signal, but we're counter trending again, a market that has been continuously making higher closes in breakout each month. But new month, new timing cycle, we get a first red day pin hammer opportunity, potentially setting up for the reversal back into our breakout. Consolidating in that last week, an outside day pin hammer. How does price behave on the day? So new timing cycle, new month, or not doing anything at all until a level is broken. We have a new month, new timing cycle. We now have a market that closed in breakout in the new month, closed in breakout, an inside day, a large range pin collapsing day. You'll notice again from the first day, 1, 2, 3 lower closes. And a great variation now of, we have an inside day or a bullish close. From our extreme, we count 1, 2, 3 closes. And the last one, a close and breakout. 1 close and breakout in the middle, and a third bullish close in breakout at the extreme down into our opening range candle where the market initially broke down from. So we have higher time frame selling over here, made lower lows, and that put in our initial low of the new month. We have a market that's one higher close, two higher closes in breakout and inside day. We'll call that a second higher close, and a third large range day closing in breakout, an opportune setup potentially for the reversal trade. And just using some simple things from previous playbook, understanding high bull from the previous month, we may now be looking at a month that closed in breakout in the previous month, but we may be looking at a month now that is going to be a down closing month. We get our large range reversal. That market opens into the new week. We get a large pin hammer and a breakout of our opening range. Breakout of our opening range. 1 day counter trend. Collapsing 1, 2, 3, potentially to our low close of the month level. We get an inside day at our low close. Now this is a new, our inside day is a new week. So this is a Friday closing at the extreme. And you'll notice if we just look to the left, we've taken out the low of month level. We've cleared out that low of month level. Remember, we had breakout traders in the market from the previous month and markets that had been closing in breakout successfully each month. We saw that breakdown at the start of the new month and then the collapse down to the low of the previous month. Inside day, we're heading into the closing range of the week. First green day potentially setting up. New week. And the same thing happens again. We get one close and breakout. A second close and breakout in consolidation. Arguably a third close and breakout heading into the close of the month. 3 closes in breakout. 3 closes in breakout potentially setting up for a reversal day. A large range reversal day. And this last closing price at the high in breakout is a Monday, and our large reversal day is a Tuesday. And then our new month starts. We have a new month, new timing cycle. We have a bullish green day into our low first green day of the month. How does price behave on the day? So we have a Monday, Tuesday, Wednesday down low, and Thursday potentially offering us a first green day reversal setup into the new month, new timing cycle after dumping down into our peak formation low of the month level. Now remember, we had a market that had been closing higher successively month after month. When we have a counter trend, a down closing month, we may now be seeing a market offering us an opportunity to resume that bullish direction. So this is an example of where if a market gives us that opportunity and we have positions in the market, or we're going to be looking at entering in on the smaller time frame. But if traders were looking at this as a potential larger dump and pump continuation over the higher time frames, they may want to leave a trailer in the market. So we have our Monday, Tuesday, Wednesday, low of month, new month, low of week, and reversal on Thursday, and the explosive continuation on Friday. The week closes in breakout long. The week closes in breakout long in a smaller dump and pump template into the new week, new month. And that market continues to trade higher. 1, 2, 3 higher closes in breakout. 3 higher closes in breakout, a lower high, lower low. Again, traders will look at calling this a first red day. A 1 day counter trend potentially, inside day, and the continuation for the explosive move back to the high of the previous month. So recognize when we have counter trend days versus a first red day or first green day. A 1 day counter trend, an inside day, the continuation, 1, 2. We have traders again may see this as a first red day, 1, 2 counter trend, and then explosive 1, 2, 3 days to the high again. 3 days to the high. This large range reversal day is a Thursday again, Friday, and then Monday into the new week, closing in breakout. Monday, Tuesday at the high of our month, our high closing price of the month. That's our high close of the month. Now we're heading into the closing week of the month. Monday, Tuesday, a Wednesday reversal. And remember, some of these large range days may be driven by high impact news releases. But when we go through these in smaller detail, we'll be looking at exactly how these should set up when we get a large range day opportunity. But we go 1, 2, 3 lower closes before closing out the month. Breakout, 1, 2, 3 lower closes, and you'll notice that that large pin comes back and gets traders who were long on the bullish explosive move into the breakout of the previous high month level. Now, just coming back to simple stuff, that month made a higher high. Higher high could be the setup for a dump and pump. 3 lower closes, consolidation, a higher high, and a first green day again. First green day, 1, 2, 3 sideways, first green day. So we're not trading every day. We're waiting for signals, indications from the market. And we got a first green day, and that exploded back through the high of the month. 1 2-day counter trend, an outside day, but a breakout. And again, traders need to understand that seeing a down closing day into a strong market is not a first red day setup. But understand that a counter trend can offer us the potential opportunity. 1, 2, 3 inside day. We have an outside day and then an inside day for a possible continuation trade. If that is the setup that traders are already positioned in, or they're holding a trailer, the confidence to hold that position. Again, breaking out, 1, 2, consolidation on top of the breakout, 3, 1, 2, 3 in breakout. So we're in a strongly moving market. Obviously, some of these gaps are from contract rollovers, but counting 3, 1, 2, 3, 1, 2, consolidation, 3 explosive coil, and a reversal at the high of month, high closing price of the month level. So when the market's in breakout, these consolidations are higher closes, but they're inside of the original close and breakout. And then the continuation, 1, 2, 3 closes in breakout, a reversal, 1, 2, 3 lower closes. So we've started our new month in a market that again closed in breakout and continued to trade higher. First green day at the beginning of the month. The first green day inside of our 3 lower closes, and right at our close of the month, we've made higher highs inside. Higher high, a little 3-day dump and pump for the continuation back through the high of the month. 1, 2, 3, and then a new week, Monday, Tuesday, Wednesday, high close of the month, and a Thursday monkey hammer reversal back into the breakout. You'll notice again that breakout continued higher into the new week with space for a beautiful reversal collapse on Thursday. And then we head into our new week, week 1, week 2, week 3, this now first red day. We're trading up into a large range reversal candle. We get a lower low and a red day signal. 1, 2 higher closes, 3 higher closes from the extreme reversal, but it's a first red day signal. So we've had our large range day down, made lower lows for the pump, 1 higher close, 2 higher close. We're looking for a 3rd higher close, and it is, but it's a first red day signal. First red day signal. So we have Monday, Tuesday, and a Wednesday reversal collapsing back into the breakout. Now we may again have a month that potentially could be continuing to trade lower and closing as a down closing month. That market continues to break down and takes out the low of month level, closing in breakout on the Friday. We get a 1 bar counter trend and a first red day signal again in our new week. So we have a market, this is an area again where traders might identify with this as a first green day. And they potentially may be true, but we're in a market now that has had large range collapses, closed in breakout, a pump day, and a first red day signal. The most important thing is how does price behave on the following day? Obviously, there's a gap here, but we have a market that collapsed down. That may have been on major red news, but this market continues to trade lower into the next week. And you'll notice 1, 2 consolidation, 3 closes in breakout before an explosive reversal. So thesis heading into this, if there's a setup there, the low close of the month, 3 closes in breakout, putting in the low close of the month. We'll keep walking through this, but I want to make sure that traders have this reinforced so ingrained to them, the 3 lower closes, the 3 higher closes, the 3 closes and breakouts, the beginning of a new month, first green days, first red days. We have a large range reversal day closing out the month in a downward moving month. That may potentially offer us a setup on the new month. Remember, we've collapsed down. We're higher time frame sellers now in the market. We've put a low close of month in place, an explosive reversal, again, potentially might have been on major red news. And then the continuation, new timing cycle, new month, a market that breaks out, closes in breakout through the low of month level. 1, 2, 3 lower closes again. Breakout, 1, 2, 3, new month, new timing cycle, 3 lower closes. An explosive reversal engulfing all 3 lower closes. Now potentially that could be our first green day, even though it's a large range day. 1, 2, 3 higher closes. What I'm emphasizing here is often just counting to 3 and being patient and waiting for a market to coil can offer us huge all-in range expansion type days. And recognizing when a market closes in breakout where we can have an explosive move, consolidation, explosive move, consolidation, and a third explosive move. 1, 2, 3 to the high close of the month potentially in place. We have a first red day in an explosive market now that's taken out the high of month established on day 1. Day 1 in our new month. Close and breakout at the extreme. Again, this close at the extreme is a Wednesday, and our large reversal day is a Thursday. Week 2, week 3. Reversal, first red day now, back inside of the range. An inside day, and the continuation back down into the breakout. And you'll count again, 1, 2, 3 lower closes ending the week. We close the month with 1, 2, 3 higher closes back up into our high of month level that the breakout failed at into our new month. 3 higher closes again, and a large range all-in collapse. After our small highest close, a huge all-in day, a breakout day, and then 1, 2, 3 lower closes. Now remember, this isn't about trying to trade every single day. We're looking at where the market is going to help us identify the right days to trade on. So we have market that goes into breakout, 1, 2, 3 lower closes, an inside day reversal, new month, new timing cycle, trading back down into the peak formation from the previous month. In a down closing month, we have 1 month down. We have a month now that made lower lows, but closed back inside of the previous month's range. Broke down, inside day, a first green day signal, our inside day, in a market that's pinned down before reversing and exploding and closing on top of the original breakout. Now, if this breakout is failing, and this market now, new month, new timing cycle, week 1, week 2, we could be going back up to the high of the previous month, a larger dump and pump setup. This inside day is a Monday. We have a Monday, Tuesday, Wednesday pinned down to the low of day level. Thursday, Friday, ending the week. 1, 2, 3 closes in breakout. There's a small gap here, but just recognizing we see some sideways price action, higher highs. These are snow plows potentially. And then the explosive move through the high of month level. Little counter trend, a 1-day counter trend day. So recognizing again, first red days versus 1-day counter trends. And then 1, 2, 3 closes in breakout in our closing week of the month. So just reinforcing the importance of understanding week 1, week 2, week 3, week 4, opening week, closing week, high close of the month, low close of the month. We see our first red day into the closing few days of the month off the highest closing price after 3 closes in breakout, a lower low and lower high into our first trading day of the month. Again, potentially a day that gave us a fantastic collapse day back into higher level longs, 1, 2, 3, first red day, lower low. That's the example of where a first red day can take a day to consolidate before collapsing. Now, we'll be going back through these on a smaller time frame, but just emphasizing understanding the importance of timing, levels, behavior of price. We have a month now that has closed higher, made higher highs. We're on top of the breakout that failed originally in the previous month. We have our breakout day, an inside day, 1, 2, 3 lower closes, a breakout day, and another close. And if you look at the month now, we have 1 down closing day, 2 down closing days, a breakout in the long direction, and a third closing day. Our low closing price of the month may be in place. We have had no lower closes. That may be the low closing price of the month. This is a Monday, Tuesday. So again, day 2 typically expands the range. And I mentioned earlier that Tuesday on the front side of a week, front side of a month can also be where we see fantastic all-in range expansion days, similar to Thursday on the back side of the week. And that market closes in breakout. We have 1 close and breakout, 2 close and breakouts, sideways, and a third close in breakout, taking out the high of month level. The third close and breakout is a Monday and a Tuesday reversal. That closes in breakout of the high bull candle. And again, we have 1, 2, 3 lower closes, a first green day signal. Monday, Tuesday, Wednesday, Thursday, first green day. Getting into a narrower range, we're trading back up into our first red day reversal. One of the easy things to do is just project that across. We have other time frame sellers in here, and then we have 1, 2, 3 higher closes from our first green day. And this is where traders, if you're trading in here, recognizing that this is jamming you up into a higher time frame selling large range first red day candle. 1, 2, 3 higher highs, consolidation, a red day, and a vertical collapse through all these higher level longs, a pump and dump over the course of the week. Monday, Tuesday, Wednesday, inside day on Thursday. Again, we're heading into the closing range of the week. Inside day, first green day. 1, 2, inside day again. 3, close and breakout. High close of the month, closing range of the week. Monday, Tuesday, high close of the month. Wednesday, first red day again, and a all-in collapse. On Thursday, taking out the previous low of week level. Friday forms our first trading day of the month and a pullback inside of our large range collapse. And again, if we just project our low close of the month across from the first trading day of the month, you'll notice again we have 1, 2, 3 lower closes from our breakdown and an engulfing first green day, beginning of a new month. So we have 3 lower closes locking in the low of month into our first week low close of month level, then a first green day signal, potentially offering traders that parabolic explosive move heading back to the high of month level. So looking at that closing range again, a dump, consolidation, pump, template, and 1 close and breakout, 2 closes and breakout, and a third close and breakout outside of the high of month level. We have close and breakout at the extreme, 1, 2, 3 outside of the high of month level, an outside day, potentially giving us a first red day signal, but we have a more important signal after that outside day, and that is the lower low following the outside day candle. So we have our outside day, 1, 2, 3 lower closes and lower low. Now, just in simple terms, this market breaks down, but if you're trading end of day, we talked about this earlier in the video, but where a market starts to break down, larger time frames, if traders were trading end of day, this is no different. It's a one day stop. Now, obviously, with size on these markets, that's difficult for a smaller trader, but for traders who are trading smaller positions over longer time frames, it's the same type of setup. 3 lower closes, a break of that level can be a limit order with a stop in place. Thesis being now that the breakout is about to fail and they're heading back down into the range. So we have our 1, 2, 3 higher closes and breakout. We have Monday, Tuesday, Wednesday, 3 lower closes. And then Thursday, the explosive breakout and continuation on Friday back into the breakout from week 1. Week 1, week 2, week 3 collapses back down inside. Same thing again, inside day, first green day. Now, just recognizing this doesn't mean that there's a setup. So when we follow these markets across, it's always about how it sets up on the day. Now, some traders are going to be still attracted to trading at the extremes. I'm looking for coils and coils on the day for explosive range expansion opportunity. So when markets are auctioning back and forth prior to a session, or they make large moves in a session, those aren't the setups that I'm looking for. I'm looking for a market that coils sideways in a narrow range prior to the open of the market. But we still, week 1, week 2, week 3, we have our engulfment of our inside day. That market's 1 close and breakout, 2 and a third close higher before closing out the week. A reversal day back into the breakout. So we have 1 close and breakout, consolidation, a higher close, consolidation, new week, and then a high close of that week back inside of our breakdown. So projecting, we're just getting jammed inside of a range into the close of the week. So this may have offered us a nice reversal day on the day, but recognize we're trading in a narrow range now, and our risk reward gets a lot tighter. Think new month, new timing cycle may see a new explosive opportunity. We head into our new month. We have an inside day and then a first green day potentially closing out the month as we head into the first trading day of the new month. When we see this setting up into a coil and we get a first green day and a potential coil into our first day of the month, this whole sideways coil inside of that range can now be potentially preparing for an explosive move, which we see 1, 2, 3 closes and breakouts. Counter trend day, another close and breakout. 1, 2 days back into the breakout. So again, if traders were looking for a first red day, they may have had a nail and bail, or it may have been a messy day to trade. But we have a market now that's 1 day counter trend, close and breakout, 1, 2 day counter trend. And you'll notice neither one of those days have broken out. They're inside of the bull candle. An explosive continuation. So we have 1, 2, 3 closes and breakout, an inside day, and a continuation exploding to the high. Obviously, we have a gap here. We have an inside day at the high close of the month after it's broken out higher. This large range day down was the FOMC. Large range day back down into our breakout, an inside day. 1, 2, 3 lower closes from our extreme. A large pin hammer outside day, an inside day again, and then an explosive breakout candle back into our FOMC collapse, and another first red day signal into our larger death candle. That market broke down back into our breakout pin hammer, first trading day of the month. We have a breakout candle, continues to break out, 1, 2, 3 lower closes into our first trading day of the month. So just to point out to traders, yes, we have more lower closes than 3, but we closed and breakout successively before consolidating. So we have our breakout just prior to the last day of the month, pins up and then consolidates inside of the wicks. 1, 2, 3 lower closes, closing out the month. Then an explosive first green day into our bearish sell-off. Remember, we had a large FOMC collapse, and then the breakdown into the closing range of the month. Another close-in breakout into our collapse. Front side of the month, new week, close-in breakout, potential fantastic reversal setup. Then we have 1, 2, 3 lower closes after breaking out, and an explosive continuation again, taking out the low of month level. Breakout 1, 2, 3, consolidation, pins through the low of the month, explosive reversal on CPI yesterday. Explosive reversal on CPI, potentially our low close of the month is now in place. We start our count again. We have a close in breakout starting this move off. We've closed outside of the candle below, and we're potentially now clearing through these lower closes, and we start our count again. So hopefully going back through that, number one, we talked about 3 lower closes, 3 higher closes, closes in breakout, but just being patient and understanding when a market is actually potentially making a false break, when it's breaking out and having a counter trend day for continuation, not necessarily trading any of that, just waiting for setups to occur, not counter trending days where we could be potentially counter trending the explosive move, but also not worried about trading days where we're in consolidation, where there's wicks on both sides and getting chopped up in both directions. Often letting a market break out first and then watching how that market sets up for either opportunities for reversals or not doing anything at all, and looking at other instruments where markets have potentially either consolidated and are setting up into your session, or they've closed in breakout and offering traders either continuation or reversal trade setup opportunities. Now you can go back through any daily chart and go bar by bar, month to month, and see the same setups over any instrument, but I hope that sort of clarified things on this particular market. We're going to go through a few others, but let's take a look now at some of the setups when these markets gave us signals. So we can start back in August, and we'll take a look at the month of August, September, and we can look at the first green day and how these markets set up over that week. Now this is the NASDAQ 100 hourly chart, and we had our first green day signal. Then we had our beginning of our new, that was our Monday. The breakout candle is our Monday. And that market traded back up into that collapse that came down through week 2. Now, when we go to our other hourly chart, we can see our first green day, Monday, closed in breakout. So you'll notice the move began in London, and then we had volatility outside. Breakout traders are already in the market. So not a reversal setup. Now, I'm not interested in trading any of these, but if you were trading this, remember we had a first green day signal, and then that market has made higher highs and dumped down into the high of day level. So breakout traders are already in the market, and we'll just demonstrate that here so that traders understand. Breakout traders are in the market. This is a 1 hour chart. So a worst case scenario, a trader could take a position with a stop below that 1 hour candle and not worry about any of this volatility. This market breaks out and closes in breakout. Now again, the next day we have breakout traders triggered into the markets, and you'll notice similar to the previous day, except they come back and stop these traders out. It stays in consolidation in the close. So traders are trying to short the high, and I'm not doing anything until I get a setup. Now, what I mean by that is that we have potentially 3 closes and breakouts setting up into Thursday, where you've got Monday close, Tuesday closes in range, but we also still have 2 days in breakout now outside of Friday's first green day level. So we've broken out of Friday's level. Now, we don't know what this is going to do or how it's going to set up, but I'm not interested in counter trending a breakout coming out of a first green day. So this is where I'm emphasizing to traders. Now, certain traders, they'll nail and bill, they'll trade these moves. I'm looking at the larger range expansion ACB templates. We're looking for setups that aren't coming back, that are scalable in size. That market explodes and breaks out again in our US window. So we'll talk about timing here in a second. That's our 10 a.m. candle breaking out and continues to trade higher, closing in breakout back into our level from the 16th. Breaks out again on Thursday before coiling sideways. Now, we're going to talk about this in a little bit as well, but the 4-hour rotation, the market's broken out at the extreme in a market now that is potentially going to offer us a reversal setup. The new 4-hour rotation on the indexes, metals, energies, begins at 6 a.m. Now, 10 a.m., our 10 a.m. candle has broken out already, up high. They're forcing the U.S. session traders to buy high. This may have been a major red news explosive move coming out of our U.S. window on Wednesday. Flash manufacturing PMI at 9:45 on Wednesday. And then after that explosive move on the news, that market continued to trade higher. But the new 4-hour rotation starts at 6 a.m. Now, this is where traders will often miss this move because they're thinking 9:30 a.m. New York time. I want to reinforce the understanding we have 2 pin hammers at the high of the day, and that market breaks down below those lows on top of closing price and inside hour, and then a pin hammer closing right at 8 o'clock. There's 8:30 unemployment numbers on the backside of the week after this explosive move, but our 4-hour rotation now, we'll look at the 4-hour chart in a moment on this chart, is giving us a 1-bar stop. A 1-bar stop as the market's about to open. That candle closes at 8 o'clock. We have our 4-hour candle now at the extreme reversing, meaning that our new 4-hour candle is going to be opening possibly back inside of the range as we saw on Wednesday's reversal. Our new 4-hour is going to be opening up down inside, which means possibly the institutions, whatever, they're loading up top. They're loading their positions up top and then dumping it into retail to have a worse fill price as this collapses. Maybe they are, maybe they aren't. But the opportunity to sell high has been given to us in a range expansion monkey hammer template. This is the monkey hammer. High of week to the breakout of Friday's level, an all-in ACB template. These are the setups that I'm hunting. Reversals off of wicks on daily charts are not. Now remember, this market closed in breakout out of a first green day. 1, 2, 3 higher closes from the extreme. 3 higher closes in breakout from the extreme, taking out a previous high of week level for the all-in collapse back into the breakout. Timing is critical. Most traders will not get this trade because they are going to wait until 9:30 and this market is already running away. Now, when we look at this on the 4-hour chart, Number one, we can see that the high of week level was taken out. And let's just go back to some really simple understanding. 1, 2, 3 closes in breakout. And as we closed out the week, we have 1, 2, 3 lower closes and a consolidation into the close of the week. So we have 3 lower closes on top of our breakout. Thesis can be now that that is our low close of the month in place. Low close of the month in place, and our monkey hammer template gave us higher highs. Higher highs as we head into the closing week of the month. And what do we see on our closing week of the month? We have 1, 2, 3 higher closes. 3 higher closes into our closing week of the month. The new month starts, and the closing high close of the month, closing out the month, setting up for a reversal. We have our lower low. Lower low for the pump into our high closing price of the month for our rotation time, and a 10 a.m. collapse. Day 1, day 2, day 3, Monday, Tuesday, Wednesday collapse at 10 a.m. Again, there may be major red news on that day, ISM services, but we now have our reversal back into our breakout, new month, new timing cycle. So the news collapses, and then 1, 2, 3, reversal. So we have our closing week, our closing range of the week now, with potentially the low close of the new month in place. So again, we can use the 4-hour timings if we're going to enter into trades for these moves to accelerate. This market reversed 10 a.m. on Thursday and then closed out the week. So Thursday, our reversal day at the extreme, low close of the month may be in place as we head into week 2. Now, week 2 takes out the high close of August, and again, the opening range goes higher. Opening range and then dumps down. 1, 2, 3 closes back to the high close of the month. So we have our low close of the month in place. The market's gone up now and made a high close of the month on Thursday, heading into Friday in the closing range of the week. Now, this market began its collapse in the London session. It engulfed at the high close of the month, and then our 6 a.m. candle begins the collapse. 6 a.m. candle begins the collapse. So our 4-hour reversal has already started as we head into our U.S. session timing window. So traders are waiting for 9:30, but 9:30 is over here. Now we have an opportunity now to enter into a coil, aligning ourselves with the higher time frame driving this move. So when I use this coil, these EMAs represent all the higher time frames aligning, and when we coil inside of those, I'm adding into these markets. Once this collapses and it's running into the open, I will let this go till close. We have just the situation here now to, as our 8 a.m. window is starting, to have scalable opportunity with very tight risk. And once that market breaks down, setting our profit target or holding it till close, putting our stop to break even and walking away. There is nothing to do on this setup. There's nothing to do in this setup. Remember, it closed in breakout at the high closing price of the month. The high closing price of the month for an all-in collapse back down to the close of the day. Let's zoom in on this so traders have an idea. We get our 6 a.m. candles already started. So we're inside of all of our EMAs. We get our pump at 8 a.m. Our pump, our consolidation anywhere in here or here before 9 a.m. Before 9 a.m. We have news at 8:30 and 10 a.m. Prelim U of M at 10 a.m. and Empire State Manufacturing Index. So even if I just want to start after the news at 8:30, knowing that this market is going to use the news as a catalyst. So remember, we can get in at 8:35 into this market with a 1-bar stop. This market's either going to just continue to fall, this is after the news, and fall into the 10 a.m. news, which it did, and collapse. But our larger template tells us this is the ACB setup, hold till close. It's not coming back. Walking away, locking in a minimum profit as a break even, or taking some off, but letting this market fully run to the close. Now that was our setup right here. Our high close of the month. Remember, we went up and closed at the high of the month before collapsing down. Now, this is where traders can make a decision. They may see the larger template in place for the move back down to the low of the month and leave a trailer, a smaller trailer in place, or align themselves with that thesis still being in play. 1, 2, 3 lower closes back inside of our breakout. So we had our breakout that failed, and we're now back inside of that, potentially targeting where our explosive move out of that first green day took place. But this market continued to break down. And remembering that that month closed as a down month after successive closes in breakout. So we had a month that made a lower low and then pumped up to the high, into the peak formation high from the previous month before breaking down. Now this market is traded back down to the low of the previous month. We had our 3 higher closes closing out the month. We'll follow that across. Just step back and look at the hourly chart again. We see the lower low beginning to pump up, close and breakout at the high close of the month. And then we have 1, 2, 3 lower closes and lower lows in the new week. Lower lows in the new week. Now looking ahead on the calendar, we had the FOMC. So if traders are confident that this could potentially now be the high of the month and they're leaving a trailer, there's nothing to do except manage their risk on that profitable position. And we can either leave that at the extreme with the confidence that after this lower low, this market on FOMC is going to continue to trade lower. It continues to break down. Now, when traders aren't in this trade, there's nothing to do here. We just have a market that's continuing to break out and go lower. So if it breaks out, we're counting closes. Breakout, 1, 2, 3 lower closes. This market is still continuing to go down. Now we're into week 3, the closing range now, the last week, heading into the last week of the month, and we go 1 in breakout, 2 first green day. Potentially now we have the low close of the month in place. Week 1, week 2, week 3, and week 4. Low close of month after our first green day signal. And if that's our extreme closing out the month, we can now go back and look at our daily chart. We can get 3 higher closes. And this is where we see our 3 higher closes. I'll just highlight that here for traders. 3 higher closes closing out the month. Close and breakout. 1, 2, and 3. Monday's opening range is a pump day. And we have our pin hammer closing. That's our 6 a.m. This is a 1-hour chart, 6 a.m. pin hammer. So again, an early entry if traders were to take that, because the pump candle on the second hour, the 9 a.m. hour, but just understanding if you take that trade and you're allowing yourself to get in early on that 4-hour thesis, the 4-hour rotation of time. Remember, we have our high close into a downward moving month. We have our engulfment, and we have a pin hammer. It's a 1-bar stop with the thesis that once it breaks the low of day level, we will go to break even and walk away, with the thesis being we could be targeting now back to the low of the month. It's a new month, new timing cycle, or close of the day, whatever traders are comfortable taking the bulk of that off after clearing a level, but having a 1-bar stop aligning ourselves with that 4-hour cycle. Now we had major red news on the day, Jolt's openings, and the close of the 4-hour candle, I'll just highlight that. And just emphasizing to traders, we're underneath of closing price. So we've pumped up, coiled sideways. We had our entry on the smaller time frame, but we have major red news. If we wait for 10 a.m. now, we have an opportunity to position ourselves in the market, even with using a 4-hour chart as an entry maximum stop, or even the opening price, and entering in on our smaller time frame at 10 a.m. Now, when we go to our smaller time frame, our 5-minute chart, we can see that we have an opportunity now to enter into an existing short position. If we had gotten in early, there was no news on that 1-hour chart, and this is the stop hunt back up after the news, and then we have our opportunity, a 1-bar stop where it was 10 a.m. news that collapsed. That's the Jolt's job opening, but a first bar or first bounce on the 1-minute chart may have allowed traders to enter into this trade. The point of me demonstrating this, though, is to emphasize to you understanding timings. The 4-hour rotation had already rolled over. And if you just go back through all your 4-hour charts on any instrument, you'll see each week that one of these extremes is put in by a 4-hour candle. Now, timings wise, when does that align with our session? Now, this pin hammer engulfment closes as the 10 a.m. candle is about to open. 10 a.m. candle is about to open. Again, this is the NASDAQ for the explosive reversal the following day. We have Monday up high. Again, remember, new month. New month. That's the high close of the month. They've dumped down into the previous low month level and potentially now have put the low closing price of the month in place heading into the close of week 1, which typically will end on a non-farm payrolls release. So now we have our low close of the month thesis in place. This may have offered traders a trade on the day in that session, 10 a.m., New York session again. Beautiful, explosive move. But we'll look at non-farm payrolls now after the non-farm payrolls release. We have our 4-hour rotation in place, and this is another example of where traders had the opportunity to enter into an existing 4-hour candle move. Prior to the New York Open, there was major red news in the session. We can still manage our risk or be one and done before the news with an opportunity before the session begins, understanding the rotation of the 4-hour cycle. We're down low, we've dumped down, and if I use my all-time frame EMA coil, again, that 7 a.m. opportunity just below closing price. So remember, low close of the month. We're coiling on top of other time frames now rolling over. Our 4-hour rotation is in place, and this market gives a beautiful opportunity to position ourselves with either a set and forget, so we can manage our risk. We can position ourselves at closing price. So I'm not worried about candles, I'm worried about levels, and I can still manage my risk, aligning myself with that higher time frame, placing a stop below that extreme at closing price for an entry or better, below closing price at better, or if I'm going to scale into this and get out, be out before major red news. Now, when we go to non-farm payrolls, we have our thesis in place that we're potentially now locked in the low close of the month, but we need to wait for payrolls to be released. It spikes right down into that level before coiling, and our 10 a.m. gives a beautiful engulfment candle in a sideways coil. Now, obviously, traders can position themselves inside of that coil with a 1-bar stop, aligning ourselves with that higher time frame in a market now week 1 that's potentially going to expand the range after non-farm payrolls back through the high of the week. We go back to our daily chart. I'll just highlight this for traders. Our non-farm payrolls day, we had lower highs heading into the close of the month, meaning we're down low into the low close of the month and the previous low of month level. So if we just project that across, thesis is that they're going to jam people in on payrolls, and they gave us a beautiful coil after the news in our third hour, aligning ourselves again with that 4-hour rotation. So we have our non-farm payrolls release. That 4-hour candle closes at 9:59. We have our low close of the month potentially in place. Heading into payrolls, we wait for the news to be released and wait for that new 4-hour rotation to start. We get a beautiful coil for the explosive move back through the high of the week. You'll also just have a visual notice, one large leg down, 1, 2, 3 lower closes, and then payrolls. And we've got 1 close and breakout, 2 close and breakout, 3 closes and breakout after non-farm payrolls, the new 4-hour rotation, a coil, an explosive move from low of week to high of week on a non-farm payrolls Friday. Now I want to visually just keep showing traders the same things on a smaller time frame. Monday's opening range, we have a close in breakout. Week 2 expanding the range. The week closed in breakout, 2 closes in breakout, and a third close in breakout. Okay, Monday, Tuesday, Wednesday, we potentially may have had news on this day, the 12th of October. We had CPI. When we have high impact news like that, we can see a second day trade, which I talk about in the playbook. Any major high impact news, CPI, FOMC, we can have a second day follow through. And you'll notice that the large collapsing candle on Friday after a Thursday CPI is our 10 a.m. 4-hour candle. 10 a.m. 4-hour candle. Again, aligning ourselves with the 4-hour rotation, and the 6 a.m. candle has closed against the CPI candle in breakout in a market now that is thesis pump and dump into the close of the week. High close of the month may now be in place. Now I want to paint the picture for traders of when I talk about hunting setups. So all these other types of opportunities are your decision to trade or not. I'm looking for ideally 3 closes in breakout at the front of a month, the middle of a month, any instrument. I look for this template anywhere. 3 higher closes in breakout. Ideally no major red news on a Thursday. We saw that this week in a follow through Japanese yen. These processes apply to any instrument in any session, because if you understand the timings, major red news or the template, so we just follow this through. Pump day on new week, pump day, lower closes, and then Thursday the collapse into the close of the week. We have a 4-hour chart here, and we can go down to our smaller time frame to align ourselves with these setups if that is the setup that you're hunting. Once a market goes into breakout, so for example, we close the week back in the range after 3 closes in breakout, we pump up into our death candle, and we have a larger range of sellers where sellers came into the market, and we can now have a thesis that the high close of the month is in place and identify setups if and when they present with the timing rotation of the 4-hour cycle. So if the high of the week is now in place, we're making lower lows and lower closes. Lower low, pump 1, 2, and a 10 a.m. reversal for the collapse into the close of the week. Week 1, week 2, week 3, now week 4 potentially closing out the month. We get our 1, 2 higher closes into our downward closing month, a pump up, and a rollover, and the market is collapsing into the US window. So again, we have our 4-hour pin high of the week already in place. If this market's already running away, well, I may not be trading it. So again, getting away from trying to chase everything and waiting for that 3 CIB template, which may have shown up on a different instrument. We may have had one more day or a first red day close and an opportunity to sell high up here, but we didn't. It kept collapsing down. And then the thesis can be in the closing range of the week now that they're putting the low close of the month in place. Let's just step back and look at this. So we have week one. Week one, this is a 4-hour chart. Week 2, 3 CIB. Week 3, a first red week, lower lows, and the pump and dump into the close of the month. Week 1, week 2, week 3, and week 4. A typical pump and dump template. And our thesis, again, can be attached to these 3 higher closes, 3 lower closes, 3 closes in breakout. We're looking at our daily chart, and same things apply as we went through in the first part of this video. The pump up, first red day, the 3 higher closes, and then the dump down into the close of the month, and a first green day heading into the new month. And that process starts again. So if we aren't sure or we don't have a setup, instead of just trying to trade at the extremes, number one, aligning ourselves with the timing and understanding, are we in a trending situation, week 1, non-farm payrolls typically in that first or second week. We have our non-farm payrolls candle on this is a 4-hour chart again. So we've started that from our first green day, aligning ourselves with that higher time frame, heading into Wednesday, the midpoint range of the week. We can take a look at that. We have our 1-hour chart. We have a new month starting. So we have our first green day, low close of the month is in place from October potentially. We're heading into the new month on the Wednesday. Remember what I said about on Monday, higher highs or lower lows can give us a thesis for dump and pump or pump and dump, day 1, day 2, day 3. We have higher highs on day 2 again. And we have a beautiful coil, 3 higher closes, first green day and 3 higher closes. Remember what I said about counting to 3 and letting that market coil. Breakout, new month, new week, 1, 2, 3 higher closes into the new month on day 1 of the new month. Now we had 8:30 and 10 a.m. major red news, and this market is an opportunity for traders either to have a small starter in line and looking for a news catalyst trade, a continuation into our 9 a.m. hour. Again, you can still manage your risk after the news, or after our 10 a.m. news, taking a position and just putting your stop in place and walking away with the thesis that day 1, we looked at the 4-hour, we've looked at the daily. Day 1, this may be the low close of the month. It's day 1. This month may now be going on an explosive reversal. So using maybe smaller size, but holding for longer. But we went through the 4-hour, the 1-hour, the daily chart. First green day template coming out of a consolidated coil at the low of month level. An explosive move on day 1 into the new month. And that followed through all the way back through to the high of the previous month. Remember what I said about counter trend months. We had a down closing month in August, a down closing month in September, and a down closing month in October. 3 lower monthly closes. Now there's a lot of major red news on this calendar, and again, just following this across, the EMAs representing the higher time frames. We have this market continuing and making higher closes. The volatility increases as we get up higher. If we go back to our daily chart, we can't see that, but we have another breakout candle, and we have, remember what I said about counter trend, we have a market that's reversed up near the high, giving a close and breakout, but it's actually inside of the breakout candle. And then we head into the 10th. Before we get there, this is our large breakout candle again. So a beautiful coil sideways at closing price, all time frames aligned. So basically, this is just one large trend trade back towards the highs. We haven't taken out that high. We go 7, 8. There's our small day, and here's our counter trend day. So again, if traders want to lock in profits or if they've left a small trailer in place, you notice the volatility and the market moves later. But then we have our follow-through day after our down closing day and breakout, a counter trend day against our higher time frame buying. A beautiful coil aligning ourselves with the thesis of exploding back through the high of month level in our 10 a.m. hour. So again, an early entry in 4-hour alignment. When the overall time frame is up, and we looked at that 4-hour chart, remember we can enter into a higher time frame setup in that earlier 6 a.m. candle if that setup is there. Now we're closing out the week. It's Friday. This is the closing range of the week. Thesis is this trade now is going to go till close of the day, close of the week. We have Monday, Tuesday, Wednesday, higher highs, a reversal underneath the high inside of our breakout candle, and then free cash Friday, another beautiful coil. Now, I personally like to take the money off. I don't hold positions, but that explosive sideways coil is where traders have the opportunity, again, aligning themselves with that higher time frame thesis of where they're going to coil sideways and explode back through those highs. 3 lower monthly closes, and then the explosive reversal and continuation in the long direction. And noticing how we have these breakout candles, we don't want to be looking to counter trend that strong breakout. However, when we have one-day counter trends, we can look for that sideways parabolic opportunity again the following day. So we'll take a look at that. We have the 10th. The 11th is our pullback day. The 13th, that's a Monday. This counter trend day is a Monday. There's no major red news on the calendar on this day, so if this move spooked people, that's okay. We can wait until this market pulls back and coils in our new 4-hour window. Our new 4-hour window, again, just if we blow this up, the importance of timing, understanding timing. When that new 4-hour window starts, we have an opportunity to position ourselves in the coil, pin hammer consolidation for that continuation hold till close trade thesis. More importantly, though, looking for the templates. So 3 closes and breakout. Well, we're obviously not going to have that. We're in a market now that's in breakout, but this may offer us individual opportunities to continue with that move for nail and bail trade setups with the higher time frames driving that move as we get to the end of that last week. Thesis again, high closing price of the month may be in place, sit on our hands and let the new month open up, looking for 3 lower closes back into the breakout from the previous month. So often on a non-farm payrolls week, I can look at cross-currency rate pairs, but on a non-farm payrolls week, thesis always is potentially that they may be putting in one of the extremes, a high or low close of the month. And all we need to do is look left for higher highs, dumping down on week 1, first green day, which means our low close of the month may be in place. Now remember, this is just one index, so if I'm looking for 3 closes and breakout, I need to let that market break out. I'm not trying to trade these. I really want to emphasize that. I'm not trying to trade these movements or the extremes. That's not the setups that I'm looking for. I'm looking for the monkey hammer, but when I can build my thesis that one of these extremes is in place and it does break out, now I'm going to start looking for that monkey hammer if I can't find it on a different instrument. That market trades lower though. It makes higher highs on Wednesday before dumping down into our low close of the month level. But we may have our extreme in place. So we have our first trading day of the month was on Friday. It was an inside day. Higher highs on Wednesday. Thesis is dump and pump. Non-farm payrolls Friday. They go higher. So remember, I'm not trading this. I'm letting the market set up. We have our non-farm payrolls release. So now our thesis can be that the low close of the month is in place. Non-farm payrolls, there's a gap, probably contract rollover, but now we potentially have our low of month in place. That market coils and gives a beautiful parabolic explosive move on Monday, day one. Now, we have all time frames behind this move. We have a gap on this chart, but it's the same on all the charts. But again, an opportunity, a 1-bar stop at the New York Open if traders were looking for the range expansion trade. Beautiful coil. When we get sideways coils into all the EMAs, that coil is where I want to position myself at the open. If it was on a 6 a.m. rollover candle, I don't mean at 6 a.m., but on the 6 a.m. 4-hour candle, the same opportunities can occur heading into the U.S. window where we have an early entry opportunity when we've come off one of the extremes, as we demonstrated on that 4-hour chart. But an explosive opportunity on Monday, day one, a day one runner expanding the range on week 2. Now, when the market's going higher and we're trading into the new month and we continue to make higher highs, higher lows, and we're putting in higher closes, well, then the thesis is that the high close of the month is not in place yet. The high close of the month is not in place. So as we go higher, week two goes higher, closing in breakout. We continue to go higher. Monday opening range, close and breakout. Tuesday expands the range, close and breakout. It's an FOMC. An FOMC Wednesday high close of the month so far. And we have a beautiful 2-bar reversal heading into FOMC. Now, I'm not suggesting to trade FOMC, but it has the same result on this particular template as the monkey hammer. So high close of the month, they've pumped it up. We get our 2-bar reversal. Obviously, if traders were going to trade that after first bar, after a 2-part release, that's entirely up to them. I don't typically trade FOMC, but you'll notice when it's a Wednesday, they can resume the move back up. When it's Thursday, it's typically going to be the high of month or low of month close. Backside of the week, there's a big difference between a Wednesday large move and a Thursday large move. So we begin our march back up after FOMC, which made lower lows. Remember, the ideal template is 3 higher closes, high close of the month, 3 CIB, high close of the month. And sometimes we won't get 3 CIB, we'll get 2 CIB and a signal day. First red day at the high close of the month on the last week of the month, in this particular case, heading into the closing range of the year. When we have that collapse from the first red day, again, 10 a.m., which starts a new 4-hour candle. So when the 4-hour candle closes down, we're in breakout now, but 4-hour candle is down. We'll look at that in a second. So if you're trading this and you align yourself with the 4-hour time frame, this allows traders to position themselves again on the smaller time frame. This is the 1-hour chart with a 1-bar stop. And as you finesse that even better on the 5-minute, we'll take a look at this in a moment. That's the London session getting this move. The second day continuation, first red day collapse. But it started with the 4-hour 10 a.m. cycle. And thesis being is that it actually started on the Thursday at the 6 a.m. rollover on the 4-hour candle. This market broke down and the new 4-hour candle started right here. Again, another example of where traders had the opportunity to position themselves at the 9 a.m. open, the 8 a.m. close on this particular pin hammer engulfment prior to the New York Open. So 9:30 sometimes is not necessarily the time to be entering into these markets. They're worse fills, they're harder to trade, you're inside of the volatility. The institutions have already taken their positions. It's a 1-bar stop. There's no greater risk associated with this. It's a 1-bar stop. Now, thesis again, they've put wicks, or you can wait and trade on that pop-up in there, or take a starter position with managing your risk on a small starter. And then as that market proceeds to confirm your thesis, either add to it or just leave that position in and potentially add to it the following day. Whatever traders are comfortable with, or don't trade it at all. But 3 CIB, high close of the month, 4-hour rotation at the extremes. 4-hour rotation at the extremes. If we blow this up, again, we can see our large candle. We had our daily chart. We're heading into the close of the month, closing range of the month. We have our 10 a.m. after our 6 a.m. candle closes. 10 a.m. inside of our smaller 6 a.m. candle on top of closing price. The new week, the new Monday, day one, we have our London 4-hour pin hammer candle, allowing traders, again, just even if you're using the 4-hour chart, doesn't matter. We're aligning ourselves with these higher time frames. 1, 2, 3 first red day. 3 higher closes, first red day signal, high close of the month. The pump and dump template. New week, new timing cycle, new month. We start to auction lower. 1, 2, 3 lower closes, closing out the week with a first green day. This could be the low close of the month. Non-farm payrolls Friday, pinning up and closing as a first green day. We had an explosive move on the 6 a.m. 4-hour candle on the Monday. When we look at this on our 1-hour chart, we have our first green day, but a beautiful coil. So again, another example of being able to enter into the market on that time rotation. No major red news on the calendar. This is a 1-hour chart, first green day trade. If we go to our 5-minute, an absolutely perfect, beautiful 5-star scalable coil. No major red news on the calendar. We have our 6 a.m. starting. We can get in early. We can add for an explosive range expansion trade. Now remember, we had our 3 lower closes, putting in the low close of the month. We had our non-farm payrolls closing as a first green day, and we start our new week off, our new Monday, with a beautiful first green day sideways coil. All time frames driving this move. That market closes that 4-hour candle at 10 a.m. And just for observation, you can see the larger W formation pattern down low. 1, 2, 3 lower closes. Beautiful coil. In our 6 a.m. 4-hour candle rollover, all the lower level shorts are caught now. We're into the first full week of January. January can have 5 weeks of trading, but we ended December, then January started. We had the first week putting in the low close of the week. Second week now reversing that range. Opening range breakout on Monday. A do not counter trend, a day one runner. And we go 1, 2, 3 higher closes in a market now on week 2 that's going higher. This is not a monkey hammer template. We have a market in breakout. We can project that level across. Now just coming back to that, so traders, if you understand the setup that you had on day 1 in this larger template, this is an example of where, if our thesis is we're going back to the high of week 1, the high of the month, to be holding on to a 5-star opportunity or leaving a trailer in place. Now we go into our new week. We have 1, 2, 3 higher closes in consolidation. We still are in consolidation of a larger 4-hour box. Again, I'm looking for monkey hammers. I'm not interested in trading this stuff, the wicks or anything else. I'm not trying to read price action. I'm looking for low close of the month, high close of the month. 3 lower closes and breakout, 3 higher closes and breakout. When we go down to these smaller time frames, a 4-hour, 1 hour from the daily, we can see where we don't want to be trying to just take trades. I'm looking for scalable opportunities. We have Monday, Tuesday, Wednesday closing in breakout for the Thursday reversal back in line with our 4-hour template if traders were going to trend trade this move. Week 1, week 2, week 3 closing in breakout. Week 3 closing in breakout. So remember the 4-hour rotation. This candle at the low of that week, the low of this week on Wednesday, is the 10 a.m. 4-hour candle. Week 1, week 2 reverses. Week 3 dumping down, giving us a reversal if traders were looking for a reversal trade. Timing, new 4-hour cycle after the breakout, the close and breakout, coming back to where that box started from. One leg down, new week, 2 legs down, 3 legs down, close and breakout, looking like a first red day to traders, but we're in a market now that's giving us a reversal setup. First green day close on Thursday. Even though it's up high, it's in breakout, and that market continues to break out and trend on Friday. Don't counter trend a market that's still putting in higher closes. We head into almost the last week, pretty much the full last week. We get 1, 2, and a first red day signal, but not an ideal template. Not an ideal template. We're trading back into the opening range. Monday's opening range was down. We're trading back into the opening range. We're looking for 3 CIB pump and dump templates. Now, if traders were looking at shorting this, it's a nail and bail. It's a 10 a.m. rotation. We're on a 4-hour chart. So a 10 a.m. rotation up high for the collapse back inside on Thursday, high of the week, but we had a first red day close, but we're back inside of that range still. They've put a low in place on Monday. Monday's opening range broke out and dumped down and closed where Friday's closing price was. Near the end of the month now. So come back to our original close and breakout, pullback, and a third close in breakout at the high close of the month. That is the high close of the month, heading into the last trading day of the month. Another example of where the move started in the earlier 4-hour rollover. So we've got our 2-bar pattern at the high of the new week in a market that's closed in breakout again. That's our third consecutive close and breakout at the extreme. When we look at our smaller time frame with our EMA coil, we get the high closing price of the month, and we have our 6 a.m. rollover already happening. We're underneath of closing price. Thesis is that the high of month is in place, and so I may get in anywhere in here where we coil into our 8 a.m. hour. My worst case maximum stop loss is either going to be at one of these extremes, or even at the extreme itself, just putting a position in the market with a hold till close mentality. Once this market breaks where the pump started and New York opens, allowing that to go to break even and walking away, a hold till close setup with the high close of the month in place. 4-hour rotation is already rolled over. So we're getting in. The higher time frame has already started to roll over. They're pumping up. I'll take a position anywhere in here prior to 9:30. 9:30 opens. 10 a.m. opens. I'm at break even and walking away. 10 a.m. is down here. New 4-hour cycle. New 4-hour candle opens and continues to collapse from there. But you cannot counter trend the coil. All time frames are now aligned, and they have flipped and are reversing this market into the close of the month. Now, I just want to emphasize to traders, those EMA coils only apply, strictly apply only when there is a setup. I do not use that at any other time. I only use those when I am looking for a market to explode out of a consolidation. Very important to understand that. So also repeating that I'm looking for 3 successive closes and breakout for monkey hammer templates. And as I've mentioned, we can see that go 1, 2 closes and breakout, 3 closes and breakout, high close of month reversal, and a first red day signal. We can see first green day signals, or we can see 3 closes and breakout for a reversal day. Maybe not necessarily a monkey hammer, but following that back through. 1, 2, 3 to the high as a new month starts, or as a month ends. 1, 2, 3 to the low, 3 lower closes, and looking for the explosive reversal or explosive trend trade depending on how price sets up. Now I want to just sort of show that the templates are there, usually in the 3rd week, 3 CIB, but it can show up in any week. But also how timing, this is a 4-hour chart again, how timing can be affected. Now opportunities perhaps for reversals up high prior to the New York Open when we are at the extreme, the high close of the month or near the end of the month, and we've come up for 3 weeks. Again, this may end as just a weekly session or monkey hammer template, and the market can continue to go higher before collapsing. And you'll notice again 1, 2, 3 higher closes into our monkey hammer reversal template as we head into the end of a month. 4-hour rotations can really help you align yourself with that understanding, and then positioning yourself with a tight risk and knowing when to hold till close. This is just a fantastic template. 3 higher closes again, and the opportunity to position yourself in the 6 a.m. 4-hour candle. So that might be at 7 a.m. It might be at 8 a.m. But when you're on that template, week 3, we've had week 1, week 2, week 3, and 3 higher closes. So you know this on a Wednesday. Monday, Tuesday, Wednesday, 3 higher closes, 1, 2, 3. A 1-bar stop. A 1-bar stop at the extreme on a 4-hour chart. Now this particular candle is 65 pips. So traders have the opportunity now to maybe finesse that, or just take the trade with a smaller position and accept the risk on that trade and walk away. A 1-bar stop and walk away. Using the 4-hour rotation when we get the 3 closes in breakouts at the extreme, whether it's low close of the month or high close of the month thesis. This is week 2 in a new week, and we had the opportunity on week 2 in this particular case, 6 a.m. pin hammer, the 10 a.m. open and collapse monkey hammer template. 3 closes and breakout thesis again. The closing price, the high close of the month is in place, and then you'll notice 1, 2, 3 first red day in the following week. That was our month close, the close in breakout. That was Wednesday, closing in breakout at the extreme. Understanding when this market is potentially putting a top in place, we have maximum risk in that 4-hour range. We've already got our thesis in place where our new timing window is about to start. We have a maximum range, and when we get in on our 5-minute chart, we can finesse and tighten up our risk. And this is what it looks like when our market coils. We have our 4-hour rotation happening. The new 10 a.m. candle opens, 5-star scalable hold till close opportunity. All time frames align the sideways coil into our EMAs. The EMAs are just a visual to look for all time frames to be aligned. Now sometimes the 200 is going to lag a little bit because remember it's the last one of the bunch over the longer time frame, the 4-hour time frame. But we've got that coiled underneath, 10 a.m. rotation, the new 4-hour candle, our 4-hour entry, our maximum stop was the 4-hour candle, but we can tighten that up now even to 1 or 2 bars on our 5-minute chart. Scalable 5-star hold till close monkey hammer template. So as you follow through and go through your own charts, now I've mainly done this video on the NASDAQ, but recognizing close and breakout, 1, to 3 lower closes, and understanding how that may now be in a new month, the low close of the month, and how that can help us potentially identify opportunities and the timings of those opportunities, not just waiting till 9:30 if that trade setup is there. And if there is major red news on the calendar, being patient, letting the market either putting a small starter in, a very small starter with your risk controlled, or waiting for that new 4-hour rotation to step into the market, aligned with all time frames, having a 1-bar stop, putting your stop loss in place in either a profit target or a hold to a close mentality on an ACB template. We're coming off the low close of the month in week 1. We had higher highs on our 4-hour chart, dumping down, closing in breakout, down into our peak formation made at the beginning of the week. Just going back to looking at closing price. We broke out, we broke out, and then 1, 2, 3, beginning of a new month, 3 lower closes, and the reversal back into the close of the week. And we started it all again. Peak formation down, week 2, we're heading possibly back to the previous high of week level as this market expands the range. Monday's opening range, Tuesday closes and breakout. We have a market now closing and breakout. Closing and breakout again, coiling sideways, closing and breakout a third time before pumping up. We get our high close of the month and of the week, and the close of the 6 a.m. candle. Week 1, week 2, week 3. 1, 2, 3 higher closes in a market that is broken out. And our 10 a.m. candle opens up. I'll show that. All time frames aligned. We're back inside of a coil. Now, just to demonstrate to traders where we're still outside of some of the EMAs, but we've coiled underneath of our double top, and our new 4-hour cycle is breaking down inside of that coil, a vertical move right at 10 a.m. The coil and the continuation into the close of the day. 3 higher closes, week 3, high closing price of the month is our thesis. And if we just clear this chart, now if we zoom in on this, you'll see where we have the 4-hour candle just about to end, looking at scaling into this trade. High close of the month, thesis is this is going to the close. And when we break that level, walking away with positions in the money, better than break even in case it was to pop back or spike or anything else, but walking away, set and forget, trade setup, walking away and letting the market go till the close of the day. Monkey hammer. Now I just want to demonstrate again on this particular chart and emphasize the importance of only using this coil when I have that setup, that thesis, and that sideways chart movement at the highest or lowest closing price level. I need that coil only when I'm at the extremes. I do not use that anywhere else unless I am aligned with an explosive first green day, first red day trade, and again coming from one of those extremes. Now, we can get coils that are not at those extremes or still expanding the range. I'll look at demonstrate one of those right now from the Dow Jones. And we're looking at the Dow Jones daily, and this market reversed right from the beginning of the month. So again, we had our low close of the month thesis in place. Market pinned up and down on the first day, forming a first green day. So we have our new month starting. We have a first green day. We have a market coiling sideways, and again, you'll notice 1, 2, 3 lower closes, and our 10 a.m. window spiking down and reversing and closing at the end of that 4-hour window. If we go to our smaller time frame, we see the market dumps down at the New York Open. So coming back to understanding time rotation, they've put a low in place, If we do anything on this template, we want to be buying low. Thesis now is that they've put the low in place on first green day. Paul Tudor Jones, think of your entry point as last night's close. And we have a little pin hammer. This is an example of where the timing of the shorter time frame, if we look at our 4-hour chart, we can clearly see the 10 a.m. candle reversed. But we see that this market actually put a low in place, then made higher highs inside as that new third hour opened, and then dumped back down into that peak formation low. So as this market goes 1 hour, 2 hour, a third hour reversal inside of that 4-hour 10 a.m. candle before exploding and closing as first green day. Now, I myself am not looking to trade this, but we will look at an example as this week unfolded, how this gave traders an excellent opportunity. So we come back and look at our daily chart. And first thing the market does is it goes to the lower high of the month. Day 1, day 2, day 3, closing in breakout, and then starting a new week. Again, the thesis may be on this particular week 2. If we go back and look at our daily chart, we can look that this now may be in a reversal type template. We're possibly targeting not only the high of the month, but the highs from the dumping down month from the previous month. But more importantly, as this thesis is aligned, I want to just again demonstrate to traders the importance of the only time that I use these coils are when we have a higher time frame thesis in place. 1, 2, 3 higher closes as we head into Thursday, and we've closed in breakout. So if I just bring this 4-hour chart closer together again, we can project high of week levels across. High of week levels across because now we're in a larger dump and pump template, 4-hour rotations. This is one of my all-time favorite charts. We have 3 higher closes in breakout on Wednesday's close, but we're looking at the larger dump and pump template from the previous month, and we're on the front side of a new month. There's no major red news in the New York session, and this, to me, is as good as it gets. This is an absolutely monster parabolic coil. All time frames driving this move. And when we get these setups on any day, if I get any one of these setups after 3 higher or 3 lower closes, or on any given day, first green day, first red day, I will take this trade with as much size as I can get on it. But aligning myself with that bigger picture, looking left to see where the money is, those previous weekly highs. We're in the front side of a new month. Day 1, day 2, day 3, closing in breakout, a coil sideways, an all-in opportunity, all time frames driving this move. A beautiful 3 higher close, high close of month. That means the high close of the month is not in place yet. They're still going higher. So when you have a setup there and you understand timings, we're at the high close of the month, and we had a first red day, 4-hour cycle. We have an engulfment in our earlier 4-hour session. The 6 a.m. candle is a bull trap. 10 a.m. opens and starts the dump on the backside of that move. Week 1, week 2, week 3 blows off, putting in our high close of the month into the new week, coiling sideways, the 10 a.m. collapse all the way back down, the monkey hammer over a couple of weeks. Again, traders deciding if they want to hold positions. But week 3 up high, high close of the month, I'd be okay with leaving some of those positions in the market. This is a beautiful trade on the way up, sideways coil, and the reversal on the way down. Now the difference on looking at the smaller time frame, we can see that the 6 a.m. candle closed up. So the 6 a.m. candle closes at the extreme. The new 4-hour candle allows traders, again, to position themselves in the market, place a max stop loss in place. Now, this is an example where maybe traders, if they went to break even early, would have been stopped out possibly. or they take a position, they put their stop in place, and they walk away and leave it till the close. Now, on this particular day, they've come back up later, and this is rare, but I'll explain that this was an FOMC minutes meeting day at 2 p.m. So they've brought it back up there into the FOMC minutes before dropping it down 20 minutes after the minutes are released. Still having the same effect, but there was an FOMC minutes announcement, not an FOMC statement, but an FOMC release at 2 p.m. And if traders waited for that, aligning themselves again inside of that 4-hour rotation in the coil with a 1-bar stop with a hold till close profit target. Now I want to just repeat a couple of things. This is about understanding the higher time frame setups. I'm not interested in trading every day. I don't try to catch moves or grab the low, grab the high. I'm looking for specific setups. My specific setup that I am looking for every week, if I can find it on an instrument, is the high or low of the month close with 3 closes in breakout, or 3 higher closes into the high close or into the low close at the low close of the month or high close of the month. That's the monkey hammer setup. There are high probability signal days, days that close in breakout, but I want to emphasize I am only looking for trades where I can use the coil. The coil is the 5-minute chart aligning all time frames in line with the higher time frame template setup. Now, walking through the daily charts and understanding the end of the month and the beginning of the month, 3 higher or lower closes, putting in the low close or high close of the month at the end of a month, or even in the beginning of a month, where we can get our first green day or first red day, depending on the instrument that you're looking at. Now, Tuesdays and Thursdays typically will be the most frequent opportunities for monkey hammers, and monkey hammers expanding the range in week 2 or reversing the range in week 3, or even the last range of the month. Now, the coil is aligning all the time frames together, and I use 4 EMAs to represent that: the 200, 96, 50, and 20. There is no real specific criteria, but those are close to the same EMA on the longer time frames as the 20 is on the 5, the higher ones, but it shows me when I have all time frames behind the move. The next most important thing I want to emphasize to traders is the 4-hour rotations. The indexes, metals, and energies roll over 1 hour later than the currencies and crypto, and their rollovers for each 4-hour candle will be 6 p.m., 10 p.m., and 2 p.m., and the next one at 6 a.m., 10 a.m., and 2 a.m. Now, the indexes and metals and energies roll over. They have a 1 hour gap between 5 and 6 p.m. New York time where they start trading again. And their rollover times will be at 6 p.m., 10 p.m., and 2 a.m., then closing and starting again. At 6 a.m., 10 a.m., 2 p.m., then closing and starting again. The currencies and crypto markets start at 5 p.m., roll over at 9 p.m., 1 a.m., 5 a.m., 9 a.m., and 1 p.m. into the close again and rolling over at 5 p.m. So there's a 1 hour gap. But as I demonstrated in this video, the importance of understanding those rollover times can align us with the larger move and sometimes offer us tighter risk or better entries if that move is starting and there's no major red news, or putting a starter position in with tight risk before a market can take off into a session open, allowing traders a better fill. If there's major red news, allowing that news to trade and take place, but then aligning ourselves with the thesis that's already in place from the 4-hour template at the extremes. Now, the indexes and metals and energies roll over. They have a 1 hour gap between 5 and 6 p.m. New York time where they start trading again. And their rollover times will be at 6 p.m., 10 p.m., and 2 a.m., then closing and starting again. At 6 a.m., 10 a.m., 2 p.m., then closing and starting again. The currencies and crypto markets start at 5 p.m., roll over at 9 p.m., 1 a.m., 5 a.m., 9 a.m., and 1 p.m. into the close again and rolling over at 5 p.m. So there's a 1 hour gap. But as I demonstrated in this video, the importance of understanding those rollover times can align us with the larger move and sometimes offer us tighter risk or better entries if that move is starting and there's no major red news, or putting a starter position in with tight risk before a market can take off into a session open, allowing traders a better fill. If there's major red news, allowing that news to trade and take place, but then aligning ourselves with the thesis that's already in place from the 4-hour template at the extremes. And sometimes when there's news on these instruments, we follow through after the FOMC minutes. Beautiful coil, we have a first red day collapse and a beautiful coil into the New York Open, even on the backside, 10 a.m. major red news. This template is the news is the catalyst in 9:30 open, 9:45 flash manufacturing PMI. But again, the coils here, the news catalysts, or even a first bar trade set up for an explosive move in line with the news catalyst on the backside of the week heading into the close of the day, a monster breaking down from the highest closing price of the month. Now, not all of our markets are going to trade exactly like the NASDAQ, and the purpose of the masterclass is to go in depth into the individual markets and look at the opportunities that they have presented and will continue to present. And the ACB model is, I'm looking for trades that aren't coming back. And as I mentioned, looking for 2 to 3 of those a week are all I need to find. They're scalable. They reproduce on any markets. We'll be going through currencies, metals, the indexes in more depth. I'm going to be adding more material into the masterclass regarding behavior and mindset of the trader. But these are all scalable opportunities, and I'm only focusing on certain setups that rinse and repeat that are scalable in size. So hopefully you enjoyed the first module that was on the NASDAQ index, which will have similar applications on the other indexes, the other US indexes. But we'll be going in depth in each module and can continue to dive deeper in just understanding the bigger picture of hunting out ACB easy money trading setups that are scalable in size, traders. Enjoy your day. We'll see you in the next video.